Good morning, everybody, and welcome to Fortansti's charity team seminar on new charity property horizons beyond the roadmap. We're looking this morning at the exciting developments that we've actually seen over the last year. What a roller coaster the last year has been, hasn't it? Quite a year to behold and many things to take on board. But actually, what we've discovered as a team and what we've observed as a team is that there have been huge numbers of opportunities and innovations coming through. There's been huge accelerations, but that's actually allowed us to move forward in ways that perhaps we would never have anticipated before. So this morning we're going to have a look at that backdrop, the opportunities and innovations coming out of it, opportunities for portfolios to review, retain, refresh and repurpose, having a look at what you can do in relation to your leases, renegotiation, exercising your breaks and hybrid discussions around those properties or disposing of them, and how you can consider and plan and avoid the pitfalls and relevant factors around those properties. So we'll be having a look at change of use classes, EPC requirements and property that becomes stranded because it doesn't comply with those, as well as green leases and some other opportunities for future development, innovation and projects. So starting then with 2020 to 2021, I put on the slide there, what happened? Well, we all know what happened, but as I say, there were many positives and huge accelerations coming out of that process. I've separated the slides into different spaces, but we've seen so many changes in terms of the property world and the spaces that we live and work in. So in retail spaces, obviously we've seen a huge hike in online sales. And although we've seen some real distressing moments in terms of high streets, we've also seen some real opportunities coming through that we'll look at, and huge acceleration in terms of the country's logistics, and also that focus on shop local that's been incredibly positive. Workspaces. Well, actually, we've all discovered, haven't we, that we could already work from home, but we just didn't know we could. And many charities were actually ahead of that trend with lots of their employees working from home anyway. But what we've looked at is needing to maintain that firm ethos and strategy through working from home, making sure that we've got remote working software in place. My goodness, the beginning of March 2020, we were looking at people scrabbling around in some cases just to get laptops for their employees. And again, charities were often ahead of the game on that. But we've had to deal with a lot of kind of practicalities around those workspaces being more remote. So electronic transfers, where we are coming into the office, hygiene factors, and also as we come back into the office, that focus on collaboration spaces where we can really interact with our employees. Because what I think's really moved on since 2020 to now is the fact that where we all thought maybe to start with, we'd never want to go back into an office again. Actually, the reality is that many people are, and we're missing that human contact and that ability to interact with our colleagues. Then, of course, we've got communication spaces in its many forms, e-learning coming through, online entertainment, streaming, podcast, mixed spaces. I've said mixed spaces because, of course, our homes have become our work and our communication spaces, and that may not always be something that we all like. But actually, then we've also got designated entertainment spaces, virtual reality coming through in a big way. We want all our spaces now to be safe, and that's going to be true going forwards. And actually, we're looking for outdoor spaces. And my daughter, who's 12 years old, actually said to me right at the beginning of the pandemic in 2020, "Mummy, will I see more pandemics in my lifetime?" And I thought, gosh, that's incredibly profound. But actually, the reality is, and the prediction is from scientists, that we probably will. And so we do need to make sure our spaces are going to be safe going forwards, and that actually we're prepared and agile to deal with the sorts of disruptions that we've seen this year. Hopefully not too regularly, but if we're prepared for them, then actually we just carry on as normal. And then, of course, green spaces. Actually, what's happened in the last year is a huge focus on green policy. The government's talking about building back better, but also building back greener. We've seen a huge push on reducing plastics and people focusing and making pledges in relation to their net carbon usage. And we're all wanting to live better and eat better. And of course, we've just seen coming through the announcements around ESG investment for charities with the Butler and Sloss case, and actually highlighting that charities can, as we'll see a little bit later in the talk, focus their investment on those elements which might be environmental, social and green as well. And what I think is really exciting about that, again, is it's a place where charities can really lead the way. So, before we get into some of those opportunities in the practical property world, I thought it would be really useful to look at some of the opportunities that have come through to make your life easier in the world of dealing with property transactions. And although these innovations were there already, they have been hugely accelerated like everything else in the last year, and many more people have been forced to adopt them. Some of us might say that's a good thing in that they've kind of been pushed forward in time, and they're having to embrace these measures. So I'm going to hand over to my colleague, Nikki, who's going to talk you through electronic signatures and virtual completions.
Good morning, everyone. So, as we're all aware, the lockdown measures imposed due to the coronavirus pandemic has forced a real rethink of document execution practices. And social distancing measures meant that virtual executions, i.e. where signatories aren't all present in the same place, became the norm. So I'm going to briefly discuss e-signatures and virtual completions and how they could be helpful for you in simplifying the signing process for some of the transactions which you might deal with. So the legal world, and real estate in particular, has held on very tightly to the tradition of wet ink execution of documents, and the move from quill and ink to online technology has been quite a gradual one. However, along with many other changes caused by coronavirus and lockdowns, working in a different way has meant that even real estate lawyers and the land registry have been forced to look at wet ink signatures and the availability of new technology and signing methods. Without boring you all of the detail of the legislation, the existing framework does make it clear that businesses and individuals can feel confident using e-signatures in commercial transactions. So I'll just talk you through a few of the benefits. Many e-signature platforms are now available, but one of the market leaders, this isn't a plug, is DocuSign. It's just the one that I'm going to talk about that I'm familiar with. And the option of remote execution using an e-signature platform provides many benefits. There are time savings at every stage. Once documents are agreed, they can be circulated electronically immediately without having to wait for law firms to prepare those hard copy engrossments, which can take some time. Once the documents are in circulation, there's no need for anyone to wait for them to be posted or couriered between signatories. And once everyone has signed, there's no need to wait until the lawyers are holding the executed originals before completion can take place. There's also the environmental saving in terms of not preparing paper copies and a postage cost saving. But one of the main benefits is that the use of the e-signature platform mitigates the risk of errors being made when signing. So the signatories are essentially led through the process and they apply their signature exactly where required within the document. Finally, important again for charities and a lot of organisations, there's a record of the audit trail of the whole signing process in the certificate of completion, which is available once the electronically signed document has been completed within the e-signature platform. By e-signing, documents can be finalised, circulated, signed, checked by lawyers and completed within hours rather than the much lengthier process which is normally required with wet ink. Right, land registry guidance. So whilst this is a novel and a very modern approach which is being adopted, for land registry documents at least, we don't have complete freedom as to how this is implemented. The reason for this is that the land registry has set out its own criteria, which does have to be followed. Again, I won't go into the detail of all of this, there's just not time. But ultimately, the individual solicitor submitting the land registry application has to give a written certificate to the land registry, confirming that to the best of their knowledge and their belief, the land registry requirements for the execution of deeds using electronic signatures have been satisfied, which is actually quite onerous. So in order to be able to give this certificate, a conveyancer needs to ensure that the steps which are set out in the Land Registry Practice Guide on execution have rigorously been followed. And it's just useful for you to know what the main requirements actually are. Firstly, only certain documents can be signed electronically, and solicitors do need to check very carefully that the documents that they're dealing with fall within the Land Registry list. Secondly, all parties to the transaction need to be represented. Thirdly, a solicitor and not a client must set up and control the signing process on an e-signature platform. Fourth, the name, email address and mobile numbers of signatories and witnesses, if any, must be entered on the platform depending on the document. Witness details can be entered later but before the witness signs if the platform allows. 5, the platform must email signatories and witnesses to let them know that the deed is ready to sign, and access to the document has to be via a one-time password, which is sent to the mobile number of each person, which is called a sort of two-factor authentication. 6, witnesses have to be physically present still for the signing, as is the case for wet ink signatures. And 7, the solicitor controlling the signing process must date the deed within the platform. So, some challenges for you in relation to e-signatures. New processes bring new challenges, and the main challenges for solicitors where their clients decide to use these e-signatures is the fact that they will need to diligently ensure the land registry requirements are complied with in order to give that confirmation, that certificate, to the land registry. Other constraints to consider are, and of particular relevance to you guys, is that, is a witness required? If a witness is required, then the witness has to be physically present when the signatory applies their signature on a screen. So the land registry requires two-factor authentication, which I've just touched upon. It's a 6-digit SMS code sent to the mobile number for both the signatory and the witness to access the document. And there are potential confidentiality issues because the witness will have access to the whole document on their device when they're signing, although they won't have access to it after that. Also, if constitutional documents of a signing entity do not permit electronic signatures, so for example, seals, because it's not possible to seal documents electronically. If a company is an overseas entity, unless you have a legal opinion from a local council advising there's no concerns. If contractual provisions preclude electronic signatures, if the place of signature is important, as it may not be clear where a document was e-signed, and limits on the size and the number of documents which can be uploaded to the relevant e-platforms or envelope. So not all contracting parties or solicitors are going to be consistently comfortable with using these e-signatures. So it's another reason why adoption isn't going to necessarily be that quick, and it's likely to vary from transaction to transaction for some time yet. And finally, this is on to Anna, mixed signing is possible because not all parties have to sign electronically, but all parties will still have to agree the use of e-signatures, and anyone using the e-signature process will need to comply with land registry guidance. So Anna, would you like to pick up on the mixed signing point?
Yeah, absolutely. And I think that's incredibly useful because as Nikki's just picked up on, not everybody can use the DocuSign process or indeed any of the electronic signature processes. And in particular, DocuSign, as Nikki said, can't be used with seals. So it may not work for all charities, but that doesn't mean it couldn't be used to move forward the transaction in terms of one party signing electronically. Just to pick up on it from the charity point of view specifically, although seals can't be used, you can have pre-embossed paper seals that might assist in moving things forward more quickly. But of course, there is more of a fraud risk with those because you're not physically hanging on to your sealing punch, as it were, but equally, of course, that sealing punch is often in the office, and if people aren't, then those pre-embossed seals can be useful. Now, what I have seen during the pandemic, and something I think might be quite useful for charities going forward, is where their governing documents allow actually amending their signature process, their execution process during this period, and potentially have an alternative process for emergency periods. So just to remind you that unincorporated charities can execute by deed with the trustees signing, but those trustees can delegate their ability to sign with a Section 333 delegation. And it's always worth knowing that where those delegations lie and who it is who's got to sign. And actually at Tansley now, we've actually got a bank of execution clauses and delegations for the charities we're working with regularly. So we won't have to ask you every time. Once we know what those are, we can put them in place, but we'll also know if you've got alternative processes that have been brought in. Now for charitable companies, the majority of charities who will be on this call, you can sign either by 2 trustees or a seal which can be attested by 1 or more authorised persons. So it might be actually that it's easier to switch to a seal with 1 person attesting during a pandemic period to give you more flexibility. It can also be 1 trustee and a company secretary, or even 1 trustee in the presence of a witness, which actually has been one of the most helpful processes at the present time because it just requires 1 person rather than having to pass the document between a number of people and have those crazy situations where you're signing through windows, etc. So well worth having a think about if you haven't already. whether or not electronic signature may be an option, whether you could consider alternative clauses. Nikki, back to you.
Okay, last slide from me. So very quickly, and as an alternative, and I've got to admit it's the one that I use the most, is the virtual completion process. So pre-lockdown, virtual signings followed what became known as the Mercury signing protocols. And these protocols emerged during the 2008 Mercury Tax Group court case, and they're well established. I won't go into those, don't worry. But the process essentially relies on the emailing of documents to signatories, followed by the printing, the wet ink signing, and the rescanning back of signature pages to solicitors, followed by the originals. Now, not everyone has got the necessary printing and the scanning equipment in their homes, and some institutions prohibit employees from printing out business-related documents for security and confidentiality reasons. But as I said, that's the one that's most commonly used, I found, and it has been in the last year. So my takeaways and your 5 steps to safety when signing your documents: you need a legally recognised e-signature. You need your intention to authenticate. Question yourself, did the correct person sign? Formalities need to be complied with, and you need to consider the registries where your documents are going to have to go potentially post-completion. Now, all of that feeds into what we're doing with our office spaces, and there are lots of innovations which are coming through, and we've actually got some of our own, which Anna's now going to talk about. Thank you all.
Thank you, Nikki. Yeah, absolutely. There are lots and lots of new electronic innovations coming through, which, as I say, have all been accelerated, like the signing process. And Fortansti has a process for managing portfolios called Ingenuity. And that tool is a management and collaboration tool, which is bespoke to each individual client. It allows 24-hour access to data for clients and selected third parties, which might be agents or valuers, as well as members of your team. As I say, it's tailored to the client's needs, and we will send further information on that after this session if that's of interest to anybody. Now, before we move on to office spaces, just to pause for a moment, just to let you know, because I know that's always a worry at this stage of the talk, that we will be sending out the slides afterwards. So if anybody's trying to write wildly and madly, then please don't worry, the slides will be to follow. Also, just to mention that we will have a Q&A session at the end, but if you do want to ask any questions as we go along, you can use the Q&A function at the bottom of the screen. We're not using the chat function for the purposes of this talk. All the Q&A will be through that function, and that's simply really so that we avoid background noise, because we all know how annoying that can be if someone else takes a phone call during a seminar. But as I say, if you've got any questions, feel free to put them into that Q&A function, either during the webinar or indeed at the end. So moving on then to what's happening in our office spaces. And we actually had a webinar for our charity clients last week in the employment arena, and we had it was more of a round table with a number of charities there who were able actually to share with us their take on what's happening in their office environment, although of course it was an employment webinar, so it was from a bit of an HR slant. So let's take you through the results of that, which I think are really interesting and feed into what we're going to talk about in due course. So we asked the question, as the end of the lockdown approaches and social distancing measures begin to relax, what are your plans for staff returning to the office? And we asked them to vote on 4 options: all staff to return for all of their working time, a hybrid model, the majority or all staff will remain working from home, or no decision has yet been made. And as you can see from the pie chart I've just brought up, it was an absolute landslide, 0 on any of the other options and 100% on hybrid. Now, obviously it can be different for different people, and this is just a snapshot of the charities who were attending that round table, but I think it's really fascinating that everyone's moved to the idea of a hybrid model, where actually that might not have been the case previously. Al?
Yeah, thanks, Anna, and good morning, everyone. So following on from the responses to the first question, it's obviously pretty clear that a hybrid home office working model is envisaged. So the next step for us was to ask how long this pattern would be in place for. So if I can just ask you to pull up the pie chart as I run through it, Anna. So the no one envisaged that the pattern would be in place for less than 12 months. 40% felt that the pattern would be in place for 12 to 24 months. 20% felt that it was actually going to be a permanent change, and 40% felt that they were as yet unsure. So I think that's quite interesting, the results from that, because it's clear that we're looking at a very much a medium to long term, and in certain cases permanent change here. And I think the 40% sort of uncertainty level probably reflects the sort of uncertainty we've got at the moment around COVID generally, obviously with the new Indian variant and the uncertainty that comes with that. Possibly also some sort of concerns or uncertainties around the suitability of infrastructure to actually facilitate some of these sort of longer term working patterns, and also potentially suitabilities of the properties as well, which we'll have a look at a little bit later on in the webinar. But I think certainly from businesses that we're talking to at the moment, clients, and also for Danstey, it is very much going to be a hybrid working pattern going forward. So I will pass over to James now.
Thanks, Alan. Morning, everyone. So we then asked, obviously, for that 100% planning to introduce a hybrid model, what amount of time they expected staff would spend in the office, with choices being more than 50%, less than 50%, total flexibility, dependent on work type or role, or unsure. And the results for those was that 40% expected people would spend 50% or more of their time in the office. 20% said total flexibility, and then 40% said they expected it would depend upon work type and role. And I think that sort of really reflects some of the other comments that have come before, which is that although there is this sort of trend towards a hybrid model, I think people are still feeling their way as to what that model will look like, how long it will be in place for, and I expect it'll be a moving picture over the next sort of months and years as to how that will bed down in practice and how it will evolve. And I'll hand over to Anna for the final question.
Thanks, Al. Thanks, James. So the other question we asked was what key factor is or has influenced your decision making? And we looked at whether that might be around cost saving, reducing property overheads, around retention of staff and responding to their needs and their request to work more flexibly, compliance with COVID-19 health and safety measures, allowing for green measures, or some other reason. And as you will see, the results on the slide show that actually, perhaps this is linked to it being an employment webinar, but that reducing property overheads actually didn't factor at all. And neither, interestingly, did green measures in this particular survey. Whether that's true across the board, of course, is another matter. This is, as I say, just a snapshot. But what we do see is a mixture of people saying, yes, they're looking to comply with the health and safety measures around COVID-19. Yes, there might be some other reasons, but really predominantly they're looking at retaining their staff and responding to their flexible working requests. So moving on then to opportunities with our properties, and this would apply whether we're talking about those office spaces or other operational spaces, as well as retail spaces and any other property owned by charities. Now, I wanted to just pause for a moment to look at the key considerations that you might have to have in mind when you're looking at your portfolio and considering what you're going to keep, what you're going to renegotiate, and what you might dispose of. And I think top of the list really comes those operational requirements. If you're talking about spaces that are being used either by your employees or by your beneficiaries. What's the location? What are the core charity needs? How does it work for those individuals using it? Does it work in terms of particular needs that those individuals might have? Does it create staff flexibility or the right environment? And does it allow for staff attraction and retention and fit into working patterns? Looking at commercial and economic, as well as those operational factors, and looking into the world of retail a little more. The retail shops are often the face of the charity. Will we still therefore want to retain them in order to make sure that our brand is out there and noticed by our supporters? Or will we be moving more online? Many, I think, will be focusing more on those specialist shops such as vintage and furniture that we've seen being really successful recently. Those specialist shops, perhaps in the right location, also promoting the brand. But of course, it will vary from charity to charity. Also looking at the commercial and economic factors, of course, we need to think about reducing costs. Despite what the results of the pie chart say, I don't think anyone is going to say that cost saving is not a factor and a consideration, particularly with the year we've just had for charities where income streams have been squeezed and reduced. It's been massively important to think about the fact that there is more than one way to skin a cat. When we're looking at costs, obviously, we can also look at change of location. We can look at the options between freehold and leasehold and the different flexibility and agility perhaps that leasehold may provide, but the capital investment elements of freehold. I've put on there as well practical. I think we do have to be really practical and consider things like broadband, especially given the climate we've just come through, as well as potentially being aspirational. You know, do you want your property to reflect who you are as a charity? And for some charities, particularly environmental charities, that will be absolutely vital, that your public face, that your buildings reflect your internal ethos. So absolutely, it should be aspirational as well. And then, of course, not to forget, because we are lawyers speaking, of course, governance and legal. You need to make sure that you are aware what you can and can't do with individual properties. Is it permanent endowment, in which case you generally cannot dispose of it other than in limited circumstances without consent from the Commission. The purpose of permanent endowment being, of course, to ensure that that property is retained in terms of its capital, and as with any permanent endowment, that only income is taken from it. Is it in fact property that's being gifted for a particular purpose? We call that designated or specie property, sort of classic example being a village hall that has been donated for the purpose of creating that space for the village, and therefore can only be disposed of other than in certain circumstances with particular advertising requirements, if that property is replaced with another property for the equivalent or same purpose. And it's worth saying at this moment that we've actually just seen coming through the government response to Law Commission report on technical issues in charity law, and actually that looks at a number of changes in that sphere, both in terms of permanent endowment and in terms of designated property, although they have retained the advertising requirements for designated property if you're going to dispose of it in order to avoid the risk of loss of public confidence around community assets potentially being sold and frittered away. Now that's really beyond the scope of this talk today, but I just flagged that. We actually, when we were first thinking about this talk, that was something on the horizon to come into place when parliamentary time allowed, but we actually had the Queen's speech on the 11th of May, and the new charities bill was within that Queen's speech, as well as a number of other really interesting bills to those of us in the property world. So we had the Environment Bill, which James is going to touch on later, as well as the Leasehold Reform Bill and the Renters Reform Bill, which we'll be touching on as well. So we now know that all those are coming forward in the next parliamentary session. So governance and legal, just to continue on, you obviously need to look at your government documents and your internal compliance. And to do that, you need to be bringing together a core team, probably not the Board of Trustees, but a steering group with a number of key players across your senior management team, trustees, including in your senior management, HR, finance, facilities and operational. And you want to be involving your advisors at an early stage to cover off those governance and legal aspects, but also where you need to obtain reports that I'm going to be talking about a little bit later, that you obtain those at an early stage. So I've put there on the slide, start early. So moving on then to that question of do you retain, refresh, repurpose property that you already have? And this comes back to that question that I passed over just momentarily, of whether or not you're looking at freehold property or leasehold property. And freehold property obviously gives you the benefit of that capital investment and the certainty and footprint in a particular location, which particularly if you're talking about operational property might be absolutely vital. Obviously, though, you need to be absolutely sure that it is fit for purpose and in line with legislative change coming through. So do we have access for those with particular needs? Are we in line with the green credentials and requirements and EPCs coming through that we're going to talk about in just a moment? And then looking in the alternative, if we're not going to retain them, well, what is the time scale in which we want to move forward and dispose of that property? But in the alternative, as I say, we could be looking at leasehold property. And in that respect, I'm just going to hand over to Al.
Yeah, thanks, Anna. So really, in terms of leasehold premises, the considerations are much the same as they are for freehold. But with leasehold comes what I call a sort of added administrative layer in terms of compliance with the terms of the lease and potentially requiring landlord consents for things such as alterations. So this is something it's really important to be comfortable with the terms of the lease. So if an organisation is looking at retaining the property, some of the core terms of the lease to look at to ensure that they fulfil the sort of longer term strategic goals would be one of the key ones being the term of the lease. Obviously a term with only sort of 2 to 3 years left to run can obviously make it a little bit more difficult to plan for the future, whereas if there is a term 5-10 years plus, it obviously allows a bit more sort of the ability to a plan for sort of the future. Other key terms of the lease to ensure flexibility are terms such as break clauses. So can an organisation get out of their lease if they need to at a certain point in the future? Does the lease have the ability to allow the tenant to carry out alterations, and what terms can they be carried out under? Does the lease allow for change of use, and also other methods of disposal such as assignment and underletting as well, which is something we'll look at a little bit later on in the webinar. But I think it's first and foremost it's fundamental. Does the bricks and mortar work, and then it's a case of actually looking to see whether the terms of the lease actually allow you to do what you want to do. Obviously, if the decision to retain the property is made, then it may well be that there is a decision to sort of potentially put a bit of investment into the property. So there are various varying degrees that this could apply to. So it may well be that it's a bit more of a temporary stopgap measure, in which case it's a lick of paint to bring it up to scratch. And I think charities are particularly sort of unique in this respect because they do potentially have access to a sort of volunteer workforce for what are described as certain sort of low-level works, if it is something along the lines of a lick of paint. Alternatively, it may well be that actually the decision's made that a bit more investment is required, and actually the property needs a bit more modernisation to bring it up to standard. In which case, it may well be that some improvements in terms of environmental performance to improve overall sustainability are required, and obviously that links back to Anna's point she made around ESG goals as well, as they can be particularly important depending on the nature of the charity. It may well be that other alterations are required to the property to comply with legislation, again, as Anna's touched on in terms of disability access, for example. Obviously, in terms of freehold and leasehold premises, if there are alterations or modernisations being made, it's always you always need to bear in mind that there may be the need for planning consent, particularly in relation to sort of exterior, sort of larger scale alterations. Occasionally, actually, covenants affecting the title to the property can impact on whether certain alterations can be carried out. So that's always worth bearing in mind. And obviously, in terms of leasehold premises, the main one is going to be landlord consent to certain alterations and changes as well. I'll pass over to Anna now.
Thanks, Al. So obviously the final option might be to repurpose property, and that might be actually to move it from one particular use entirely to another, but it might also be that you're looking to share that space, particularly if you've got a lease where you haven't got a break coming up and you're going to be in there for some time and the rent is significant. If you can share that space, that can be incredibly useful. Now, obviously, in terms of subletting, as Al's touched upon, that the issue is that you may well need to comply with the lease or get landlord's consent to do that. But also you might be thinking about sharing space that you actually own. And there are a number of models out there whereby charities are actually sharing space really successfully. So it can actually be that there can be vehicles for joint ownership of a building, and charities, perhaps with a like purpose in particular, might club together to use that space. And I know that was true with the British Ecological Society and their premises in London, where they had a building shared by a number of charities who had their own office space designated, but then had joint use of the breakout and conferencing spaces. So there are some really innovative structures out there, and it's worth thinking about that. it's worth thinking about that in terms of your current property portfolio, but also in terms of properties that you might acquire in the future, and whether that sort of structure could work for you to really maximise your charity funds, because you might not need the conferencing suite every day, but it might be more cost effective to have access to it than have to pay, for example, to have a conference in a hotel. So just some thoughts there. Moving on then, we wanted to look at opportunities to renegotiate or right size. And I think, although this can be looked at from both a landlord or tenant perspective, I wanted to just look for a moment as charities as tenants, because one thing that I wanted to stress is that more and more what we see and what we hear from agents and landlords is that charities really are gold plated clients, and nowhere is this more true than in the retail arena. And I think it's just worth bearing that in mind, because it does give you a much greater degree of negotiation and leeway than you might normally have. Now, in the current market, of course, we have seen some difficulties, and as we'll go on to talk about in relation to, for example, break opportunities, landlords who don't want empty property can be getting quite difficult and putting their foot down. But notwithstanding that, if it's an option of you breaking and leaving or retaining you, then they may well be willing to be flexible. Now, all of this, though, can be a little bit dependent on location, can't it, Al?
Yeah, absolutely, Anna. So, I mean, one of the things that we are sort of really seeing is that there are sort of pockets of resistance, as I've started to call it, but particularly around London. Yeah, certainly from some of the negotiations that I'm dealing with, not necessarily just for the charity clients, but other clients as well, that landlords are really sort of sticking to their guns in terms of what they want in their leases. And it's obviously London historically been, it's always been incredibly buoyant, and I think they're probably still riding on the wave of that. But yeah, we are seeing that there is this sort of pocket of resistance. It'd be interesting to see whether that stance softens in the future as well. I mean, just to sort of touch on generally, really what Anna's sort of mentioned in terms of it is very much more a tenant's market now. So this has very much been created by the pandemic. Obviously, this affects certain properties more than others, as we've already touched on. Sort of high street retail is a sort of prime example of where sort of the bargaining position is in favour of tenants now. Landlords are obviously concerned about their exposure to potential business rates liabilities as well for empty properties. This can also impact charity clients who hold investment property, as they'll only qualify for rates relief where the intended future use is charitable in nature as well. In addition, landlords have concerns over the overall value of their portfolios. Obviously, empty properties mean they're not getting rental income. But we are, so one of the things that we have sort of seen as well is certainly in terms of sort of end of term negotiations for new leases, is the introduction of what I call sort of COVID clauses. So, for example, rent suspension provisions in the event of sort of pandemic events, also the ability for tenants to break leases where there is a pandemic event, and certainly in times of lockdown, we were seeing that rent commencement dates were also linked to lifting of lockdown restrictions, depending on the particular user. So I think all of this really adds to the fact that this is sort of building in favour of tenants ensuring that their leases provide for maximum flexibility, and also to mitigate the impact of COVID and also potential other pandemics in the future. And the only other point I'd make as well is just an observation which we've started to see as well is far more tenancies at will, whereby sort of tenants are almost sort of taking on properties on a try before you buy basis. So they're sort of entering into these tenancies at will, sort of very sort of short term, sometimes quite informal arrangements, checking to see whether properties actually work for them, whether they're getting the necessary footfall, etc., with a view to taking on and committing to longer term leases once they're happy with the position. So I think it just goes to show that landlords are sort of more and more sort of willing to do what it takes to get tenants in now. But obviously, one of the points that Anna's touched on is the importance of break clauses. So I'll pass back to her now because she has sees them in very many guises.
Yeah, I do. Thank you, Alan. The worst time for me is actually when someone comes to me and says, I want to exercise this break and I've planned around it and we're all ready to go. And you have to say to them, goodness, it's a really horrible break clause. It's a full compliance break clause. So that the thing that I wanted to flag up is that not all break clauses are born even. Actually, there are a whole range of break clauses, from completely unconditional through to conditional, for example, just on paying rent and vacating the property, through to full compliance that require you to have complied with everything within the lease. And that compliance can be either at the date of serving notice and or at the date that you actually leave. And those full compliance clauses are almost impossible to be certain of complying with. So it's a license for the landlord to write a check or to demand a payment, I should say, because what happens is, in order to get out, you end up having a negotiation, because the landlord will say, well, you haven't complied with this small point over here, and you'll end up having to negotiate and pay perhaps a proportion of the rent for the remaining term in order to get out. So what I would say is get your breaks right from the outset. Try and make sure when you look at leases that you really think about the breaks, and don't rely on the fact that the landlord might be nice at the end of the term, because when we move into a period like this, they may not be. Just on that point of vacant possession, that's not actually a legal term. It's something you have to kind of apply in the circumstances of the case, but essentially it means leaving the property empty and capable of use for the next tenant. So when you then come to the decision to break, obviously have a really good think about that in advance. Make sure, number one, that you know what sort of break it is and how likely you are to be able to break, and that you're not absolutely reliant on it if it's one of those horrible clauses. But also make sure that you get help in terms of exercising the break. They really are horrible things, and you have to be very precise. If you get minor points wrong on the notice, then that notice can be invalid. We have a saying within the legal profession: if it says it has to be served on pink paper, it has to be served on pink paper. So this is not a plug for legal services, but I would just say it's something for a professional to help you with, because it's very, very easy to get them wrong. And that really leads me into the subject of hybrid discussions, because you quite often will have a hybrid discussion that I alluded to earlier, where you're threatening to break and leave, but using that as a tool to negotiate better terms to go forwards. And that's a really good tactic, and it's well worth using. But just a warning that once you've served a break notice, even if you both agree, landlord and tenant, you can't withdraw that notice. You've then got to enter into a new lease, which adds an additional level of cost and expense. So just don't get caught out on that. You can bluff so far, but only so far. And that brings me on to the subject of disposal. And I could spend a whole session on any one of these topics, so I'm just going to go over this quickly. But just to mention that if you are disposing of property that is held by the charity, then you're caught by Part 7 of the Charities Act 2011. Now, as I've mentioned, we've seen the government response to that report on technical issues by the Law Commission, and there are some changes coming through on this as a result of the Queen's speech, but those bills still have to come through Parliament. So for the time being, you still have to comply. And that means broadly that firstly, you can't dispose to connected persons, but secondly, unless you can bring yourself within one of the specific exemptions, or you're an exempt charity generally, or indeed the land is outside of England and Wales, in which case it doesn't apply, you will need to get a Section 119 report if you're selling, or a Section 20 report for leases of less than 20 years. So just allow time for that when you're dealing with your planning for disposal. And that brings me on really to discussion about timing and method. But before I hand over to Al on that, just one thing I wanted to flag about leaving at the end of the term. Now, many of you will be familiar with the concept of a lease either being within the protection of the Landlord and Tenant Act 1954 or contracted out. And where the lease is within the Act, but you come to the end of the term, in theory, no notice is required. You can just leave, and that's it. Your liability comes to an end at the end of the contractual term, or of course, you can choose to stay in and continue on under the protection of the Act. What I have seen during the last year, sadly, on more than one occasion, is landlords arguing that the tenant hadn't in fact left at the end of the contractual term, and therefore sinking rent for an additional period. So be really careful with that. It's actually worth, it doesn't have to be a notice, but sending a really clear letter, but also making sure that when you hand your keys back, you do it by recorded delivery, so there's clear evidence that you've handed back. But I'll just hand on to Al now to talk briefly about the other methods of disposal, just by way of overview.
Yeah, thanks, Anna. I won't go into detail on the break clauses, as Anna's covered that off. But the one point I would say in relation to break clauses, when heads of terms are being negotiated, I would definitely encourage getting legal advisors, whoever they may be, and or experienced landlord and tenant agents involved in those negotiations over the heads of terms to actually sort of agree what, if any, conditions are going to be attached to the break clause and ensure that they are not overly onerous. Sometimes when you get a sort of set of heads of terms which have landed on your desk, and you pick up with the solicitors on the other side, if there is a particularly unpleasant or nasty condition attached to the break, it can sometimes be very difficult to negotiate it out of the lease. So if it can be agreed on at the heads of terms stage, it does pay dividends, and it does potentially save sort of costs of legal negotiation down the line. So it is worth it. Just to quickly run through the other methods of disposal, the sort of next one I have on the list is surrender. Now, this is probably the nicest and cleanest method of disposing of a lease, providing from a tenant's perspective you can get a complete release of all liabilities under the lease. There are different types of surrender, so sometimes it may well be that the tenant wants to buy their way out of the lease and might pay a capitalised sum to the landlord for the privilege. Sometimes the landlord may desperately want the property back, and the only way to do it would be to pay for to buy the tenant out of their lease, so a landlord paying a premium, and sometimes it's a sort of mutually convenient arrangement, and there may just maybe no premium at all, and they just proceed straight to the surrender. The next method of disposal is assignment, and as with subletting, which I'll come on to in a moment, the devil is in the detail with these. So what you are permitted to do under the terms of the lease will be governed by the assignment clause. So it is always worth looking very closely at this and making sure that at the negotiation stage it's negotiated in such a way that provides for maximum flexibility to allow for an assignment and minimise the conditions which a landlord can impose. Probably the most important point to make in relation to assignment is that just because an outgoing tenant, so an assignee has, an assignor has assigned a lease, it doesn't necessarily mean that you are off the hook for any liability under the lease, because quite often landlords will require what's called an authorised guarantee agreement, whereby the outgoing tenant will need to guarantee the performance of the incoming tenant under the terms of the lease. So that is worth bearing in mind. Finally, subletting. Again, as with assignment, the devil's in the detail in terms of the actual subletting clause, assuming the lease actually allows it at all. It can be a very useful tool. For example, if there's if a property isn't needed for a couple of years or something like that, but it's a longer term property, it can pay dividends to get a subtenant into the property to effectively cover the cost of the rent, and then take the property back from them at the end of the term of the sublease. So it can be, like I say, it can be useful, but I think the most important point to note here is that you will still be liable for the terms of the lease that you originally signed up to as well. So just because you've sublet doesn't mean that you are divesting yourself of liability. So you will still be responsible for compliance with the terms of the superior lease. I shall pass back over to Anna now to talk a little about business rates.
Yeah, absolutely. Thanks, Al. So just a quick warning, what we are seeing in terms of taking on property or renegotiating leases is landlords being really keen to avoid empty property, as I alluded to. And I think we all got familiar about 5 years ago with the warnings around the business rates frauds, but actually they're coming back through and they're really easy to get caught out on, and all the risk sits with the charities. So just to recap, business rates relief is available to charities as 80% mandatory relief if the property is used wholly or mainly for charitable purposes. That's not sticking a few boxes in there. That's actually quite a high hurdle, wholly or mainly. And then, of course, you've got the 20% discretionary reliefs on top. What we're seeing coming through quite a lot as a team is landlords suggesting that charities perhaps occupy slightly more space, perhaps another floor on top of the one that they really want to occupy, in order to make sure that the whole of the property falls into that rate relief. But you might also see, for example, landlords offering reverse rents or advantageous terms to take properties which you don't really need. Please don't get caught out by it. As I say, all the risk is with the property. The local authority can come after you to reclaim the rates that should have been paid over that period. There's also a huge reputational risk around this, as well as the fact that whilst a local authority is pursuing you in relation to rates that should have been paid and considers your charity to be part of a scam, you might lose your 20% discretionary across the rest of your portfolio, because why would they want to be nice and give you that 20% discretionary when they're in dispute with you? So something really to be aware of. Now, just moving on then, to give you a little bit of an overview here of some key considerations that are on the horizon for different types of property. This really is just a dip in, and many of these topics we'll be presenting webinars on in the next few months, but we just wanted to give you a little bit of a heads up on them. So in relation to open land, agricultural land, obviously we're seeing the change of grants. We're seeing a move away from the old principles of set aside, moving through now to grants that are focused on stewardship and public access as well, and a lot more environmental considerations. And as we'll see in a moment, we've also got biodiversity net gain coming through with the Environment Bill. Now, in relation to residential properties, it is all change as well. As I alluded to, the Queen's speech has now announced those leasehold reforms coming through, and that's going to reform the way in which long leases of residential property are able to either extend those leases or indeed acquire the freehold or exercise the right to manage. So we'll see those reforms coming through. They were announced in principle on the 7th of January 2021, but a rather opaque announcement. It talked about the possibility that you would be paying no rent in terms of a lease extension, which actually is a little bit confused, because at the present moment in time, you pay a peppercorn rent on an extension lease, which actually is no rent. So that's not a major change. But what they're looking to do is alter the way in which the premiums are calculated to be fairer to leaseholders. But of course, they have to balance with that being fair to freeholders and not taking away lock stock the value in their freehold investments where they've got long leasehold properties within them. And that's relevant to charities, particularly actually in the legacy sphere, where we often see that funny old term owning the ground rent, which means owning the freehold to a property that's got long residential leaseholds in it, be that houses or flats. And a big question for charities is, should they now be disclaiming those gifts? Will they be worthless? And do they just want to avoid the costs associated with them? Or actually is this still going to be some worth? And at the moment, we saw some changes in the markets. After the 7th of January, we saw a loss of confidence in that freehold market, but actually that rose again. And I think actually going forwards, we'll probably see a similar pattern. So I think the advice there is don't panic, but speak to your advisors, your solicitors and your valuers. Then in relation to assured short holders, we've got these renters reforms coming through. We've heard for a long time talk about abolition of the non-fault notices on assured short hold tenancies, your classic short let for any lets after 1997 that don't fall into the very low rent category, below 250 in the rest of the country, or £1,000 in London, or over £100,000 in rent that falls outside of that category. But for the majority of tenancies in the middle, at the moment we have the ability to serve a 2-month notice, which brings those tenancies to an end. And that is proposed to be demolished. Good news from a legacy perspective, if you'll still be able to do that on sale of the property, so it's predicted. And also generally the government proposes to beef up the ability to take back those tenancies where the tenant is misbehaving. Also, please note the move to EPC-C. So your properties are going to have to be that much better in terms of their EPC, and that's going to apply to all tenancies from the 1st of April 2020. To all new tenancies from the 1st of April 2025 and all tenancies from the 1st of April 2028. But what we are seeing coming through really excitingly is some new projects for retrofitting, so that properties can be made more environmentally friendly, more carbon neutral, and their EPC improved over time. And that leads me on to commercial leases. And Al, you're going to talk about green leases.
Yeah, thanks, Anna, and hopefully this will tie in fantastically with my background as well. Very green. We've so something we've started to see a lot of in recent years is the emergence of green leases, and I think it's something we're going to see a lot more of. So there's no strict definition of what constitutes a green lease, but it's essentially a lease of a property that includes clauses which are intended to help manage and improve the environmental performance of a building throughout the lease term. And what it's intended to do is generate a collaborative approach between landlord and tenant. So really the rise in these leases is in response to sort of government focus on increased sustainability and overall reduction of sort of carbon footprint. And this is linked to the fact that it's estimated that 40% of global CO2 emissions arise from real estate. So there is there's no industry standard green lease. Obviously all properties are different, so it just wouldn't be possible, but broadly speaking there are two sort of core themes that you would expect to see in a green lease. Firstly being a declaration of commitment by the landlord and the tenant to operate a property sustainably. So for example that may well be reducing water consumption, energy consumption, and sort of management and mitigation of waste. Secondly, you'd expect to see an agreement to share sustainability data such as meter readings. Just like there's no standardized form of green lease, there's no standardized one-size-fits-all clause or types of clauses, again because all properties are different. There's a real breadth of green clauses, and I saw something recently saying describing them as light green clauses to dark green clauses, so those different types of clauses can potentially cause issues for negotiation. So the two sort of broad sort of things that a green lease would include that I just mentioned, they're unlikely to be particularly contentious, but we do see situations whereby landlords are looking to sort of pass far more onerous obligations onto tenants, which actually require tenants to sort of pay money, effectively spend in order to improve environmental performance. So this can potentially cause issues at negotiation. But there are potential benefits of green leases. Obviously, from the landlord's side, it can potentially increase occupier demand. It can also retain the asset value, and also sort of it moves away from this concept of stranded property, which Anna mentioned earlier, which is something that you historically associated with sort of derelict buildings, but now we're seeing it more and more becoming relevant to buildings which aren't environmentally sustainable. And from the tenant's perspective, obviously they potentially can reduce operational costs, and also can meet certain ESG objectives which you've mentioned already. So just to come on to EPC, something I'm sure we're all sort of reasonably familiar with, but in particular the MEES minimum energy efficiency standards regulations, which were introduced to set out a minimum energy efficiency standards for certain types of property transactions. So the MEES regulations have quite significant implications for landlords, but also for tenants who are looking to either assign or sublet spaces in properties. So from the 1st of April 2018, landlords were prevented from granting any new tenancies or renewing existing tenancies where the property had an energy efficiency rating of E or lower, so an F or a G. But actually from the 1st of April 2023, this is actually going to apply to currently let properties, so landlords will be prevented from continuing to let properties which have a rating of lower than E. Now there are certain exemptions which I won't go into in detail now. Landlords are potentially liable for fines for breaching the MEES regulations, and these financial penalties are linked to the rateable value of the property and are enforced by the local weights and measures authorities. I think this year is going to be quite an interesting time to sort of see where we go next with MEES regulations. So back in October 2019, the government launched a consultation on MEES regulations with the overriding objective to increase the minimum energy efficiency standard for commercial properties to a B by 2030, so a B rating. So the government acknowledged that this is an ambitious target, but I think it is something that they are determined to meet. Now the consultation proposes a phased implementation of this sort of B standard by 2030. So they are talking about having a minimum standard of a C rating by 2027, which would be phased in from 2025 onwards. Another sort of proposal in the consultation is to actually amend the regulations to give sort of or place more obligations on tenants, because currently the obligations are very much aimed at the landlords for compliance, and they're also talking about introducing a duty on landlords and tenants to cooperate with one another. So it's going to be interesting to see what comes of those. And the reason I say this year is going to be quite interesting is because the consultation is due to close on the 9th of June, so next month. So we can potentially expect to see a bit more clarity towards the end of this year. And then just very quickly to touch on change of use. James is going to talk about planning change of use next, but really just from my point of view in terms of leases, it's just to flag that whilst there are potential sort of increased freedoms in terms of planning legislation, leases will often be quite restrictive in terms of what the permitted use is under the particular lease. So it's important to note that the planning regime and what the lease says are two separate regimes, and always to bear that in mind. But I will pass on to James now to talk about the recent changes.
That's great. Thank you very much, Al. Yeah, as I was saying, it's quite significant changes over the past year in terms of planning. Chosen today to look particularly at the new Class E, which covers commercial, business and service uses. And this consolidates many of the uses that were previously found within Class A and office uses in Class B, and also a number of leisure uses which were previously Class D uses. So from a planning perspective, changing use between any of these things within Class E is not development. It doesn't require planning permission unless you've got a particular planning condition on your property that says that it may only be used for a very specific purpose or purposes. But as Al has said just previously, planning is one regime, and your relationship with your landlord, where the occupation is under a tenancy, is a separate matter. I think Class E is a good, or it's such a significant change, but it's a good example of how the planning system is constantly changing. We have to make fun of our property colleagues that nothing's changed in property since 1925, but planning is quite political. It does change a lot. It is sensitive. Governments will often come in with bold ideas, and you quite often see a loosening of the planning system when a government sort of midway, and then as you get closer to election, things tighten up again because it's in a bit more of election, sort of attractive to the electorate. So this is a very significant change, and I think as well, it can be very challenging for local planning authorities to keep pace with the changes. And I think, Al, you had an instance recently where you were in discussions with a planning authority around use classes, and actually they managed to get it a little bit wrong.
Yeah, absolutely. Just thought it'd be useful to mention that, because like James says, it is complex. So we had this is actually under the previous use classes regime, but it's still relevant. We had a situation whereby a client was taking on a lease of a property, a conditional lease, which was conditional on then getting planning consent for change of use. So the property was originally a pub, so sort of A4 drinking establishment. They wanted to change to A1 retail. So the client did absolutely everything right, went to the council, submitted a planning application for change of use, and the local planning authority turned around and said, we don't need to do that because you're allowed to change between those use classes under permitted development rights. So we, quite right, the client came back to us and sort of said that this is what they've been told. So we had a bit more of a look at it, and we actually went back to the local planning authority and said, well, actually, no, those permitted development rights had actually been repealed, and it's only very, very small amendment, but it's obviously had a big impact for what we were looking to do. And to be fair to the planning authority, they came back very quickly and said, yep, you're absolutely right. You do need to submit a planning application, and the client subsequently put that application in and got the change of use. But it does show that it is really sort of complex legislation, and it's that even local planning authorities can get it wrong sometimes.
Absolutely, and it's very interesting to see what is the sort of political hot topic of the day. So previously, pubs were very much front and center. The loss of pubs nationally, so there was protection. You permitted development rights for demolition were removed from pubs, and obviously, as Al said, change of use was removed as well. So it's to prevent the loss of public houses throughout the country, and this sort of ties in then with the current hot topic in planning, which is new homes. So along with new Class E, there is now coming forward a new change of use that allows Class E to move to residential use, and that will be enforced from the 1st of August 2021. There are some conditions that apply. So the use is limited to 1,500 square meters. It has to have been within a commercial business or service use for 2 years. So as at 1st of August this year, that won't be Class E use because it hasn't been around long enough, but you'll be able to rely upon the predecessor use, as it were, if it was formerly, let's say, A1. But it must have been vacant for 3 months continuously. It is a little bit more generous than some of the other permitted development rights. For instance, it applies in conservation areas, but doesn't imply certain other designated areas like areas of outstanding natural beauty. But like many of the other permitted development rights, there is the need to apply to the planning authority for prior approval. One thing that's interesting, actually, although this looks quite generous, it is actually in some respects slightly less generous in terms of the current rights for change of use from under Class O, which is offices to residential. So offices to residential currently isn't subject to a floor space limitation of 1,500 square meters. And that permitted development right under Class O expires on the 31st of July this year. So if you have office stock and you're looking at the change of use to residential, you might find that there's an advantage to going sooner rather than waiting for these new rights to kick in on the 1st of August. So something to bear in mind. Mindful of time, we'll press on to biodiversity net gain and have a look at some of those changes that are coming through. So this is contained in the Environment Bill, as Anna mentioned earlier, and the bill itself has been delayed, but is expected to come before Parliament again shortly, and is expected to receive royal assent in the autumn. The biodiversity as a net gain as a concept has been kicking around in national planning policy for some time, and some local authorities are taking it forward in their own local planning policies. But as a policy requirement, it's never had the same teeth as the current proposal, which is to put it on a statutory footing. So the requirement is that for virtually all planning permissions, there'll be some small limited exceptions, they will be deemed to be granted subject to a condition requiring a biodiversity net gain plan to be approved before development starts. So even if it's not stated on the face of your planning permission, it will be deemed to be there by operation of law. And the biodiversity net gain plan must secure a biodiversity net gain of at least 10%. So it's sort of taking your baseline position at the current level of biodiversity on the site, and then you need to achieve an enhancement of 10%. Now, for some schemes, that will be done purely on site, and that's probably a measure that will be set out in a Section 106 agreement, or as to the delivery of the necessary enhancements that will achieve your net gain. However, for many sites, it may not be possible to achieve the required net gain on site, and you will then need to consider off-site habitat creation, for example, or conservation that's going to give you your necessary credits. And those off-site enhancements can be secured either through a Section 106 agreement if you're dealing with it at the time of the planning application, but there is also an opportunity for landowners to be proactive here, and that could of course include charities. The Environment Bill contains a new legal concept, as we don't have enough of them already, but a new legal concept of conservation covenants. And that's where somebody with an interest in land can covenant with a responsible body to undertake, for a conservation purpose, as it puts it. And the conservation purpose is quite broad. So it's talking about conserving the natural environment or resources, or conserving the land as a place of archaeological, artistic, or historic interest, or conserving the setting of land. And conservation itself is a broad concept which includes protecting, restoring, and enhancing. So for many charities, that will actually dovetail with their existing purposes and probably dovetail with what they're already doing on land itself. So these conservation covenants have to be in place for a minimum of 30 years, and that's linked to the works undertaken. But But it does pose, and Anna and I were chatting around this point, it does pose some interesting challenges for charities. So the legislation itself allows local planning authorities and the Secretary of State to be a responsible body. It also, in the language of the Act, although it will be fleshed out in regulations to follow, it does contemplate that charities could also be responsible bodies. And then the interesting point around that is charities can either be entering into conservation covenants as landowners or as responsible bodies, or potentially setting up a new entity to act as a responsible body for land that they already own. So they're kind of on both sides of the equation. But the whole point of biodiversity net gain is you're creating credits that allow development to go ahead. And of course, that comes with it certain reputational considerations that charities will need to wrestle with, particularly where they are a charity that is very much linked to conservation and enhancing the natural environment. Because although this could prove a very welcome income stream for charities, because the concept around not conservation covenants is you create these so-called habitat banks that can then be purchased by developers who can't mitigate or can't create their necessary net gain on site. But Anna, do you want to just add a little bit around that reputational angle?
Yeah, absolutely. Thank you, James. And yeah, we had a really good discussion about it, didn't we? And I think, these are real opportunities, in particular because the conservation covenant doesn't have to be something new that you're doing. It can actually attach to existing land where you already have, say, grassland being preserved or something similar to that. But I think charities will want to be very careful about who they're seen to get into bed with. We're all absolutely in the charity sector dependent upon our supporters and our donors, our major gifts and our legacies. And so if we're seen to be doing deals with companies that maybe are not in line with our reputation and our objects, and I think that is a challenge for us, I think charities will feel their way with this and find obvious partners who they can naturally work with, are those who might have clear CSR policies or net carbon policies, but there will be some names out there that they don't want to be associated with. And then on the topic of, do they want to become the body that's going to be regulating what's going on and enforcing? Well, again, that's a big subject matter, not least because it's not yet clear how you would be paid for doing that task, but also, would that place you in a position of conflict, which might have some reputational angles to it as well. I think some interesting topics, but definitely an area that for a lot of charities has some real opportunity and is worth spending the time thinking through. So
Absolutely.
That brings us to the end of our session. I think what I would sum up by saying is, as I did at the beginning, we've seen huge accelerations, lots of topics coming through and lots of things for charities to be aware of. There's a lot on the property managers or responsible parties plate to think about. And I think it's just worth standing back and thinking about those things now. Are you wanting to get ahead of the game with the sort of opportunities we talked about? Are you arranging your portfolio to make sure that it's best placed to cope with the legislative change coming through? So if you've got a residential portfolio, are you set up to cope with the change in EPC, to cope with the change to lose those Section 21 notices? Does the way in which people occupy property need to change to allow for that? And in the commercial arena, who's going to be responsible, you or the other party, whether you're landlord or tenant, in terms of the costs of bringing properties up to standard in terms of EPC? And if you're making changes, are you getting in ahead of the relevant planning deadlines that James talked about? Don't miss your opportunity. So there's quite a lot in the session today, but I hope that gives you all a taster of all the things coming through. And we have got a brief opportunity, a couple of minutes for question and answers. James, I wonder if you could have a look at our Q&A button and just see if any questions have come through. And if not, if anybody would like to ask them, please feel free to type that in now.
Just more a comment, Anna, just Tasha saying, lots to consider and thanks for the issues, which I don't know if we've created more, caused more pause for thought, but as Tasha says, there's a lot to take on board.
Okay, let's just give it one moment in case any other Q&A comes through.
Yeah, one more actually.
Yeah.
So Tasha's also asked about, do you know, Anna, how many charities were involved in the surveys where we were reporting on those statistics earlier?
Yeah, absolutely. It was a roundtable and it was a small number, Tasha, to answer your question. So it was actually 8 national charities who were involved in that. I think probably, I know you say that you're interested in the fact that none of them said there were finance drivers. I think that's probably reflective of the fact that it was the HR managers around the table, if I'm honest. I think that certainly would be a driver for an awful lot of charities, but I hope that answers your question. Okay, well, if no more questions are coming through, then it just falls to me to thank you all for joining us. And thank you especially to my colleagues, to Nikki, to Al, to James for taking the time to take us through all those topics. If anyone does have any questions at all, then, please do feel free to drop us an email afterwards. Our contact details are on the slide that follows, so you can email any one of us or pick up the phone to us if you'd like to do so. We will also be sending on a follow-up email with the slides and with some details of some of the topics that we've mentioned this today. But as I say, thank you for joining us, and I hope that gives you some positive thoughts to think about the environment that we're going into, lots of opportunities, and lots of ways in which you can stay ahead of the game. Thanks ever so much for joining us.
Thanks, everyone.
Thanks.
Thank you.
Thank you.